irregular corrections always a signal of strength in the direction of the move. But do one thing. You can analyze a chart with anticipation, but trade only with confirmation. Don't trade with anticipation. Okay? Hello traders, welcome to my channel. Today, 6th October, Nifty is trading around 19,631. So last week, we expected that the fifth wave of the wave A has been ended here at this point, and we can expect a bounce. This is what we discussed last week. And also, we informed that bounce to confirm, the price should make or cross above this level. Okay? That is, the expected bounce to confirm, the price should cross this level. But the price not crossed and fell down. So now, how to change the count? It's an important point. Okay? In previous video, I have said that as Elliott wave trader, or whatever method you are following, you should be very flexible in changing the count or alterations or viewpoint. So how to change the count if the price moves against us? Okay, imagine the price is here. Okay, we expect a bounce from here, but the price crossed below this low. Okay, if it is wave 1, this is not a wave 2. As we already know, the first rule says wave 2 cannot trade below the starting point of wave 1. So what this move could be? This could be a wave 1 of 5, 2 of 5, and possibly a third of 5. So from this move, what we can expect? That is, there are 2 more. This is 3, 4, and 5. Okay, downward 2 moves are still pending in this move. That is what the initial expectation. Okay, see, the price once crosses this zone, we cannot say the 500 here, because that is wave 1, wave 2, and we should have a wave 3, wave 4, and wave 5. So once it's crossed, we should expect that there are couple of 2 down legs is pending in this current move. This is for the first expectation. That's why on October 3rd, I expected this move. Once the price crosses below this point, I expected a ending diagonal to complete the wave A. That is another 2 legs down. But the price crossed this range also. So on October 4th, see, October 4th in morning, when Nifty trading around 19,398, I posted that the price holding at 61.8% distance of wave 1 of 3. 61.8% distance of wave 1, 2, 3 comes around 19,374, and the price is holding at that time. So I posted the price is holding that level, and see, what I said is, since there are gaps, this need to be filled and price need to move high for making this count correct. If gaps not filled and price goes down, possibility of more decline. See, I will explain. So when I analyze this, the price is holding the level of 61.8 distance of wave 1, 2, 3 distance. Usually the third wave will have the gaps unfilled. Okay, third wave will have the personality of going straight, fast, okay, with the gaps. These are the possibilities. Here you can see the gaps, okay, but the gaps are not filled. But here I mention this needs to be filled and price to move high. Why I said this? Because if it is wave 5, okay, if it is wave 5, the gap should be filled. These gaps are called as exhaustion gaps. Okay, you have fearful selling in the downside and a greedy buying at the top. Okay, these gaps mostly filled soon and the price will move high. That's why I said the gaps should be filled and price need to move high for making this count correct. Okay. But if the price does not fill the gap and move on downside, the count may change and more downside is possible. This is what I said here. If gaps not filled, price goes down, possibility of more decline. The reason is simple. I am expecting this as fifth wave, but the gap is appearing in this wave. So if it is fifth wave, the gaps to be filled sooner and the price should move high. Okay. Suppose the gaps are not filled and moves down, this possibly an A, B, and C. This triangle can be a wave B, and this can be 1, 2, 3 of C. This is what my expectation while posting this information. So what happened? 19,398, right? Okay, I posted 19,398 this level, and the price got a very good pullback from this zone, and the gaps are filled. You see, this is what I said in that post. The gap should be filled soon, and the price should move high. Then only this count can be right. Okay, there are still some confusion in this price action. So what could be the next move? Yeah, see, it can be 1, 2, 3, 4, 5 as we marked, and this wave A can be completed and wave B can retrace above. So what is the possibility? So this level is important now. 19,760, this high, this fourth top high is important to, this price should move above fourth top high to confirm. Okay, it may be A, B, and C, and the price may move 19,775 to 19,880 levels. Okay, can be in A, B, C if this count is right. Another assumption is this can be A and B and C started, that is 1, 2, 3, 4, 5. This count is valid when the price does not move above this level. Okay, we need to watch this level. Okay, another assumption is the C is ended here, ABC is, and B is a triangle. Okay, this scenario is doubtful if it is ABC down, because see, the 5 wave has been ended here. See this 5 wave move, 1, 2, 3, 4, 5. Okay, this correction need to correct this 5 waves. Okay, it not even came below the prior fourth low. So if the price action is correcting these 5 waves, this could be only wave A. Okay, this is my opinion. See, what is the retracement level? So not even reached 38.2%. It's just 23% retracement of this entire 5 wave up. So possibly this is a first leg in this correction, A. Okay, if it is 3 wave move, even you should have the bullish view now. This is first leg in wave 5, 2, 3, and 4, 5. If it is the correction is ended here and the price moves higher high, this could be wave 1, wave 2, and wave 3, wave 4, 5. See, we just discussed how to change the count. If the price makes higher high, there could be another 2 or 3 moves, upside is pending, right? This is what we should first think when the price crosses the low or high point, whichever we are analyzing. Okay, so these are the open points now. So now I go with the old assumption that 5 wave has completed here, and this could be possibly the end point of wave A, and we are getting a bounce in wave B, and one more leg down is possible. Okay, this is what my expectation now. So the internal waves are 1, 2, This is 3, A, B, C, an irregular fourth wave and a fifth wave. Okay. So now we are expecting a retracement level, and the retracement to confirm, the price need to cross above this level. Okay, these are we discussed. So A, B and C is possible. So what is the other alternative is, if it is A completed here, this is B. Okay, this is B. Then this could be wave 1, wave 2 and wave 3. If the price not even crossed above this and starts to fall and straight and fast with the gaps, we can assume that this could be a third wave of C. But as of now, this is second option. My first option is we should expect a bounce. The price not crosses above this zone, we may think of the other options. Okay, while analyzing now, I am having a thought of, if our first assumption was right, that is, if it is fifth. Okay, I'm just posting a few ideas to you how the Elliott wave can be analyzed in much more possible ways. This is what our initial expectation, right? Last week on video, this is what we discussed, that wave A has been ended here. If it is right, what this move could be is still possible, that this is A, B and C. That is a irregular correction in the B wave. If this is right, the C wave could be fast, because irregular corrections always a signal of strength in the direction of the move. Okay, these are all small tips. Okay, I show you one example here. See this. This is an irregular correction. Okay, this is an irregular correction. The irregular correction says the strength in the upcoming, strength in the trend is much higher. That's why you can see an extended fifth wave move. See, extended is more than 61.8% of wave 1, 2, 3 distance. See, crossed above 61 point, almost reached 78.6%. Okay, these are some small informations. So the irregular pattern signifies an more strength in the trend. Okay, so now coming here, so now coming to the current situation, if it is right, as we discussed in last week, the first option, as we discussed, the wave A has been ended here. This is wave A, B and C of B wave. This is irregular pattern. Okay, in irregular pattern, one thing you need to watch, the B wave, that is, which is crossing above the starting point of that A wave, right? Don't get confused. See, I will explain here. See, this is wave 1, wave 2, wave 3, wave 4 and wave 5. Okay, now we expect a correction. Okay, an A, B, C. Okay, A, B and C. This is the one bull cycle of Elliott wave, right? So now just think about this correction part alone. This can be an zigzag 535 or a flat 335. If it is flat, the B wave may even touch the starting point of this wave A. This is flat. Suppose if the B wave goes above the starting point of wave A and come down, okay, this is we call as irregular flat. One key point is, this B wave, most of the cases, will not go above the 1.382% of this wave A. Okay, if it crosses above under 1.618 level, then it is not an irregular correction. That is something extending an impulse wave. Okay. So if there is an irregular flat correction, we need to check what the B wave, what distance the B wave has moved comparing the A wave. Most of the cases, it will settle 1.382 levels before. Okay. Let us check here. So while discussing the last week's scenario, we have discussed this is an irregular fourth wave flat. Okay. So A, B, and C. This C wave is 1.618 of wave A. That's we discussed in last week. But how far the distance is B wave crossed below this point? So how to confirm it as an irregular flat? We just now discussed that this can go up to 1.382%. Last week we not checked this. See, 1.382%. So this B wave, because we cannot take all the moves as irregular flat. Okay. Most of the cases, the B wave will not exceed more than 1.382%. Most of the cases. Okay. Here, now you understand, right? Irregular flat. The B wave of irregular flat, most of the cases will not move above 1.382% of wave A, and this is the case we saw it last week. The option, if we have now, what could be the situation if our previous analysis is right? Okay. We always think our analysis is wrong. It's okay. What could be the situation if it is right? This can be A, B, and we are going in C. This B wave may complete here and we may fall down in C wave. That also one possibility in Elliott wave. So now let's check this B wave distance. This crossed 1.382 and stopped at 1.618. This is where the confusion point. Is this allowed? We don't know. There is no guidelines for this. Most of the cases, 1.382 levels will stop the B wave. In some situations, the price may go to 1.618. So if we take this B wave, can we take this as B wave? Yes, possible. Okay. So I'm giving the options how the Elliott wave can be applied in real-time charts. Okay. So as we said, you have to combine these factors. You should have the concepts and practical ability to apply in charts, and also more importantly, flexibility to change accordingly when the price action changes. These are two important points. And one more point I want to, I thought of saying when the count changes. We all analyze the price action with anticipation, and also we trade with anticipation. Okay. But do one thing. You can analyze a chart with anticipation, but trade only with confirmation. Don't trade with anticipation. Okay. We need to slightly adjust our mindset. While analyzing a chart, have an anticipation. Yes, that's the right thing to do. But while trading, have some confirmation on price action. So that's all I want to say. Analyze with anticipation, trade with confirmation. So now coming to Nifty. So these are the options open now. Our previous assumption is right. Okay. This is wave 5, wave A. This is wave A completed. Wave A, and wave B is irregular flat, and we are yet to go in wave C. This C of B may go to 1.618 distance of wave A. To calculate wave A distance and from wave B low, 1.618 level comes to this top. So this post definite resistance because the price action is also there. Okay. Suppose if the price turns from this, we may assume this can be an irregular flat and B ended in 19720 zone, and we can fall in wave C. One option. Okay, have this level. Suppose wave 5 has ended here and we are moving in wave A and wave B and wave C. This price action should cross above this level. right? What is this high? This high is 19,761. Okay, 19,761 levels would be broken and the price retraced and move in wave C. So that expectation level is 50%, 61 point. Yes, 19,722, 19,760 will be a good resistance point. We need to watch out this level. In previous level, irregular flat, this will be the endpoint of C. Suppose wave A has ended here, this first level of correction retracement is comes to this level. This may pose some resistance and wave B and wave C. So this wave C will come to 19,880 levels. So to conclude, if the wave A is ended here, the retracement level is A, B, C, and we look forward resistance between 19,780 to 19,880 levels. We need to watch that level. Okay. Suppose if it is an irregular flat, that is wave A has ended here, and this A, B, and C, we need to watch this level, 19,720. Okay, this level we just discussed before. Okay, this level, or even it may even cross more than 1.618, but we have to first watch this level. Okay. So what happens if the price not crosses above this level, 720, and move downwards? And this could be wave 1, wave 2, and wave 3 of wave C. Okay, that is, this A wave has been completed here. A, this sideways may be a B and C. Okay, these are the options now. So let's track how the price moves and we take decisions. Okay, so hope you understand the options available in Nifty. So don't get confused. 3 options. The last week option, that is last week low has been wave A completed, that is we are right in last week calculations. Suppose that is correct, this can be an irregular flat. First point. Second, if the fifth wave is ended here, we may look, that is wave A, we may look for a retracement above this level. Okay, but if the price not crosses this level and comes below this level, it stayed with gaps, then wave A, this can be wave B, and this C may unfold. Okay, these are the options in Elliott wave perspective. Okay, and small caps also, as we expected, we not find more decline in small caps. So in last week video, we expected that small caps may move higher. Can make one more new high, while the Nifty not make a new high. So I stand with same point as of now. Not change anything now. Let's see. The price need to cross above this level. So if this level confirms, we may assume that the price may move one more high. Okay. Again, no recommendations here. These are only for the purpose of understanding the Elliott wave in much more practical way and how to change the count as it once the price changes. Always my request is don't stick to one wave count. I always repeat in previous videos that you should have an alternate view at any time. Okay, that's give the advantage of Elliott wave. Once the price action goes against you, we have discussed how to change the count and how to think how much legs has been pending in the new wave count. If you like my work, kindly subscribe the channel and like this video, share this video to your friends and fellow traders. Thank you. We'll meet you in next video. Thank you. Have a great day. Bye.